Hello, I'd like to welcome everybody to the All Financial Group's Town Hall, April the 3rd of 2024. First, we'll start out with happy birthday, Matthew. It is your birthday today, so when you're listening to this, please go with that. I know I'm getting older because my children are getting older. So as it goes from there, I think that's one of the benefits of doing that. It's been a fun last couple of weeks for me. I did get to spend a little time in New York City last week, got to go back to the New York Stock Exchange, which is always a fun place to be when you're in the financial services world. Got to spend a little time with my granddaughter. You know, we don't get to do that as much with them living up there. And then it was great news. Matt and Leslie closed on a house. So family is important to us here at the All Financial Group. And I just want to say, Matt and Leslie, again, congratulations on a new house. I'm glad my first house doesn't cost what you all's first house was. I can still remember when my father couldn't believe what Lori and I paid for our first house. And I'll join my dad. I can't believe what my son and my daughter paid for their first house. So we will go ahead and do that. That's that little thing called inflation that we are going to talk about April the 10th, next Wednesday. We are having an event here at the office where we're going to talk about those things that you have concerns about. A lot of people have questions about what's the Federal Reserve going to do? What about market volatility? Is it going to be worse? And how do presidential elections affect the market? We're going to talk about a lot of those things at an event here at the office next Wednesday. No cost to attend, but we do need reservations. If you could give us a call, we'd really appreciate it. If you'd like to bring a friend, please feel free to bring a friend to that. So I'm going to talk about that a little bit later when I come back, but I am going to turn the first part of this over to Mel.
Thanks. Again, I would just want to start out with thanking you who are listening. And we have a few people that join us live. We wish more would. We enjoy having you guys here. And we have a lot of people that watch this later. The other thing you might not know is that these are recorded and they go up on Facebook. Not Facebook, YouTube, and are available for people to archive. And the reason I mention that is maybe giving you the opportunity to pass on that information to people that you think might be interested in meeting us and finding out more about our process and our company and things of that nature. So it's a really good way to have them listen in on our thoughts and processes. My subject today, quite honestly, is about the value of having a trusted advisor and what it means in real life. I know that there are people out there that do their own investing and they do it very well, and they don't need anybody to help them at all, but that's not the norm. There are a lot of things to know about being retired when it comes to taxes, income, and preparation for legacy and for the heirs and things of that nature. And I just had a few little things that popped up this week that might bring some emphasis on it. Our practice is not just we charge a fee and we manage the money, and you make money or you don't. And that's how a lot of people do it. We are pretty much a full service agency, and we get into the weeds when it comes to planning from a tax angle, from an income angle, and what to buy, when to buy, what's the best way to do certain things. And it's just a lot of experience that we get to share with our clients. So one particular case happened this week. Someone that was in for a big surprise happened to him. We just met these folks in early December of 23, so just a few months ago, and they decided they wanted to work with us and get ready for their retirement in about 2 to 3 years. And we started put a plan together, started getting things in place. And a week ago, 2 weeks ago, he gets notified that, okay, you are no longer needed. We're going to retire you early. Not because they wanted to leave earlier, but just because the company didn't need your services anymore and they're downsizing. The shock that went in it can be very paralyzing. So everything got put on hold all of a sudden, and they came in for a check. Where are we? How does this affect us? And we was very happy to go through the process with them and look at all the things that they have in place, their income streams, their expectations, where we are. And the gist of that meeting was, you're fine. You could have retired last December if you wanted to. It's not going to make any material difference whether you work those 2 extra years or not to your ability to be comfortably retired. And the last thing they said before they went out the door says, I am so glad that we came and got things in organized, because this would have just absolutely driven me nuts and given me so much anxiety if this had happened and I didn't have these plans in place. And the other thing was that on a call that a group of people were on that were getting the same treatment. Okay, thank you very much for your 30 years or whatever, but we don't need you anymore. Was, what do I do? What do I do? How do I get an income? What do I do? Where do I go? Having someone to sit down with and help you know what to do, where to go, and how to do it has value over and above the management of the money and things of that nature. So the other one was client has been with us for a while, and we've been going through the process of doing this and this and doing it in segments. And it's kind of come down to, we've pretty much got everything in place. The estate planning is done, the financial planning is done, and now we're ready to talk about the tax structure. And one of the things that we reviewed today, as a matter of fact, was, should I do Roth conversions? If so, how much, and what would be the net results of that? And we actually had a whole structure set up and a plan with various numbers of stay in the 22% bracket, go to the 24% bracket. How much would that take? How will that affect my Social Security taxation? How will that affect the cost of my Medicare? How many years is that going to be? If I factor all that in, am I better off doing the smaller amount, the larger amount? What's the net result? And we went through all of that and narrowed it down to a choice of, do I do this or do that? Then it's a question of, well, when do I pull that trigger? Well, there's no point in doing it now. Well, we set up the time to do it in October, because we'll have a better idea of what the tax structure for 24 looks like, and it'll give us a little sharper focus on how much we should or should not do. So that was number two. The third thing is another gentleman I was talking to about selling their business. In this particular case, it was a substantial amount of money for a house that he had sold or was going to sell in Florida. And if I didn't think too much of it at first, because I didn't figure there would be that much in gain. But then when he told me how much the capital gains was, over $1.5 million in this particular. So this is a really, really big property that he was selling. And I was explaining to him how the deferred tax strategy works, and how that all of those gains could have been delayed and put into a structure that where he could have drawn income off of it for the rest of his life. And he was, oh gosh, I wish I had known. And I have friends who are in that situation, and or may have a business that they're wanting to sell. One example is one we've already worked with. They had a $250,000 cost basis, and they sold the business for $7 million. The capital gains taxes alone was going to be about $2 million. Well, we put this through the whole process on the deferred tax strategy, and all of that 7 million is now sitting into a deferred structure where they can take income as they wish, but they're still getting the income on the 2 million that would have gone to the government instantly. So a way of maintaining the value of your hard-earned business, or real estate, or rental properties, or farmland, things that you want to not be involved in the business or the ownership anymore. You just want the results of it, but you don't have the ability to do that and pay all those taxes, or you don't have the stomach for it and give up all that money. The other thing for people that are selling a business, they know they're going to pay substantial taxes, business, properties, houses, whatever. And they may put their prices up higher because they know they got to pay the tax because they want a certain amount out of it. Well, if you get to keep all of the money to generate income for yourself, you might be able to price that item a little bit better and have it move quicker and get a better deal in that respect. So I just was looking at some things that happened just within the last 3 to 4 weeks that people literally said it was to benefit of them to have people that could explain things and help them build out a plan of action or how to respond to certain things, or give them some ability to be more comfortable with their situation because they know how it's going to affect them in their retirement years. Now, all of that is extra and over and above what stock, bonds, and mutual funds should be investing in, what my rate of return is, or things of that. The other side of it is just risk reward analysis, understanding how much risk you're willing to take, and then at the same time, how to mitigate that risk as much as possible. What Steve and I and Will try to do is build out a plan of action that will respond well in different environments. Markets up, yeah, we want to make money. Markets are down, we want to protect the money. Then we have to look at it. That's all important, but also what's the tax ramifications? What's the legacy ramifications of that? So it's just a very broad spectrum of subjects that have to be put together into a real plan of action. And it just hit home really hard for me this week about how many people we're able to help put together ideas and concepts and plans. And that really is our focus in the All Financial Group. We appreciate you guys being here and being one of those people that maybe we've been able to help. If you're not, give us a call. We'd love to do that. But more importantly, if you've got friends or relatives that really think might be helped or be beneficial to them to get to know us a little bit, Steve can tell you a whole bunch of things we got going on where they get to meet us very, very easily. And I just wanted to bring up that the YouTube videos, just go to allfinancialgroup.com on YouTube, and there's a whole archive of past events like this, and it might be useful to them. That's mine.
All righty. Well, thank you, Mel, very much. So go from there. Now we'll go ahead and kick off. One of the questions that I've had people come up and talk to me about are when we start to look at and say, where are we at with Social Security? Steve, they've told us that the benefits are going to be reduced by 2033 or 2034. So some of the questions that have come up on things like that, let's kind of look at them a little bit. Social Security, is it going to run out of money? The statement is no, Social Security will not run out of money, but because of the rules, they can only put in, they can't go beyond the value of the trust fund, that it'd be to the point where they can only pay out 75 to 77% of what it comes. So it'd come down to, they'd only be able to pay out what they receive each year. Some of the things that they're talking about to help make this so it's not quite as bad is raise the retirement age. A lot of people don't know that it was almost 40 years ago that the full retirement age was raised, and almost everybody that would be affected by that at that time was grandfathered into the old situation. So if you're currently on Social Security, it will not affect you. One of the other things that they're talking about doing is significantly raising the amount of the wages of current employees that are subject to Social Security. So it would be on both the employee and the employer at a much higher rate. Again, if you're already on Social Security, that will not affect you. People always ask that question, can I get a bigger Social Security check? And yes, that amount increases every month that you delay taking Social Security. And it's not just an annual to get your 8%. Each month gets you about 0.75% increase. Most people don't realize that there's a 76% increase in the value of your check from filing at age 62 or waiting till you're age 70. Now, you can't do Social Security in a vacuum. You have to be able to delay your Social Security to make that work. So that's one of the things that we look at when we look at the Social Security optimization, because we think that's very important to look at. It's optimum, because maximum is live to 95 and wait as long as you can. Most people don't realize that the break-even point in Social Security, if you die at about age 80, it didn't matter whether you started at 62 or 70. the amount of dollars that you received are approximately the same. They're going to be fairly close to each other. The other question that people said, these cost of living adjustments, I got to take my Social Security because I don't want to miss those. If you already qualified for Social Security at that time, you will get those adjustments for cost of living due to inflation. A lot of people don't know that. There are a lot more strategies that we have to look at when we're looking at a married couple versus a single individual. A single individual, we look at it, when would be the best time to take it? When we start to look at married couples, we have to look at both people. The survivor benefit in the Social Security area can be a very big number and a big difference if someone delays taking their Social Security. So when we do that Social Security optimization, we do look at what are the survivor benefits, because I think that's one of the most important things that we're doing. So one of those questions that came out real early, what's going to happen if Social Security goes to a different amount? One, they means test it, so I'm not going to get as much Social Security as I thought I was going to get. Or two, we get that deduction. Well, the good thing about it out there, that's one of the fears that people are talking about in retirement right now. So what are the fears that people are looking at? One, they don't want to outlive their assets, longevity risk. They'd like to leave a legacy. It's not their goal, but they'd like to leave a legacy to their children. A lot of our clients will be leaving a legacy. So the idea of legacy planning is very important. What about medical expenses? What if I have that one of the long-term care and I can't do 2 of those 6 activities of daily living is another concern. And the last one again being, what if I only get, 24% less of my Social Security? What if I only get 75 to 77%? The good thing about it is the insurance industry looks at that also and sits there and says, how do we help take care of these things? Well, we look at it to the point, if I've got an enhanced benefit rider and that enhanced benefit rider covers me if they reduce Social Security by more than 3%. If I can't do a couple of those 2 of the 6 activities of daily living, I could draw on an enhanced benefit. If I prematurely pass, my heirs can take a payment of a larger amount over a period of time versus a lump sum. So those are some of the things that we look at. And that's what I really like about, if any of those things are concerning you. 1, outliving your assets. 2, leaving a legacy to your kids. 3, what if I have a healthcare or a long-term care exposure? Or 4, what if Social Security, if they don't fix it and they actually reduce my benefits? What can I do to make those things better? If any of those are for you, give us a call. Ask about it. Just ask about, okay, Steve talked about 4 benefits that can come from an enhanced benefit rider. Ask him about that and we'll sit down and talk about it, because I think it's a very big benefit. So give us a call on that. The other thing that I do want to talk about when we come into the presentation room, we have some dates that we currently have coming up. On Wednesday, April the 10th, retirement roadblocks, those things that people start to look at that are going to cause problems, the headwinds that we're currently talking about right now. Because you remember 4 or 5 years ago when inflation wasn't a problem, now it is. The presidential election, how's that going to affect us? People have questions about what's going on in the Ukraine and what's going on in Israel. How is that going to do it? Had a pretty good run up in the first quarter of the market. First couple of days have been a little shaky. We're not really sure. I think being defensive right now could be very important. And we start to look at those things. And then we say, how do you protect yourself? We're a full service brokerage firm, so we will do assets under management. We do life insurance. We do annuities. But a lot of people ask that question, Steve, do you have the availability to protect me without using an annuity? And the answer to that is yes. If you'd like more information on that, please call the office, ask for that April 10th retirement roadblocks, no cost. It is here at the office on the second floor in the presentation room. That's one of the events that we do have coming up. We also have that shred event where after taxes on April the 20th, that's Saturday from about 10 o'clock to noon, we're going to have a shredding event in the parking lot here at the office where you can bring by the information, the old tax returns that you might not be able to let go of if you're like me, you know, that you can actually turn in and bring that to the shred event. We also have a couple of client events coming up. April the 23rd, one of the events that a lot of people like attending, so they sell out very quickly. You know, best way to get on the list is to bring a guest. We do the Schnucks de Pear Cooking School. Again, that's on April the 23rd, 6 o'clock p.m. And then on May the 14th, we have our new client and our client referral appreciation dinner. It's something that we like to do about every 3 to 4 months. One, you know, thank the new people that have come into our family and thank those that introduced us to a family or a friend. Why? Because we like doing business with people like you. And it just makes it a lot more fun when they come that way. So again, thank you very much. If you have any questions, please give us a call, give the question. That way we can answer your questions at one of these things. Because sometimes we get the thing around, okay, what are we going to talk about today? It was a lot easier for me when I had somebody ask me, Steve, what's going to happen if they reduce my Social Security? I wanted to go ahead and talk about that today. So again, I want to thank everybody that's referred friends and family. You know, we just want to welcome everybody for being a part of our family. Again, thank you very much. Give us a call if you need it.